Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lady and Bert, the Dividend Diplomat. This might be the most excited my tone's going to be throughout the rest of this video, because today we are going to talk to you about how one single dividend cut erased over $550 of dividend income between the two of us.
Smash that subscribe button. Give us a nice thumbs up, guys. Show your boys some love here. Let's show everybody some love as we talk about some poor dividend investing news. We don't like to talk about it, but we are talking about it. We like to put things on the table, show you guys the impacts to us as dividend investors, what we've learned, some takeaways, and maybe some plans of what we're doing going forward.
Yeah, so who are we talking about?
I don't
Eh?
know, but you tell me.
Well, we do have Hulk Hogan. We're talking about that leg drop because we just got that massive leg drop right here. Look at that ticker symbol LEG announced not a small dividend increase, a massive dividend increase. They dropped their quarterly dividend from, what was it, 46 cents per share. So their annual dividend was 184. It's now 5 cents per quarter or 20 cents annually. That was an 89% decrease in their dividend. Holy freaking cow, Lanny.
Yep. And we've been discussing Leggett and Plot for better over a year now, and put out the smoking guns to everybody too out there in the dividend investing community. We're buy and hold investors, so I understand if we still held on to Leggett and Plot, if you guys still held on to Leggett and Plot, because as dividend investors, 99% of what you do is you buy and hold.
Yeah.
And Bert and I were talking because Bert made a pretty good statement. Because Bert, what aren't we probably not as great at doing?
We're probably not as great at trading. And that's when the short term, when you see something in the short term that you should probably act on, and you just buy, like to your point, we're buy and hold. We look for the long term. We typically, I would say, focus on the optimism and the belief in the long term that Leggett and Platt was a dividend king. You buy in the belief that management has gone through good times and bad times before. But sometimes that can be misleading in that dividend history of being a dividend king can cloud your judgment to the point where you miss the obvious trade that's staring you right in the face. And there was a chance to trade out of Leggett and Platt when they were in the mid 20s. And that's the window that we just missed and just instead kept holding and waiting for the turnaround to come.
You know, Summertime last year, they were actually in the 30s. So,
Yeah.
um, that was probably the right time to say goodbye.
Yes.
Um,
And that's when I said, no, I'm going to buy more. And why was I buying more? It was because they were that dividend king, because you read management's earnings releases. You looked at, like, I looked at their debt schedule. I talked myself into it, said debt's not coming due till the end of 2025. They have time to turn things around. They have time for the ship to right. They don't have to make payments out. They can maintain that dividend. And management believed it. Management talked confidently about it. But what happened throughout those months when you should have been trading, you should have been moving out Leggett and Platt, the real underlying issue was sales were declining. And that's the signs were things were going down with the ship and the turnaround wasn't happening. And that's finally what caused the balloon to pop here. When they released earnings, sales were down $1 billion, it was down 10%. Volume was down. EBIT was down. Earnings were down. Everything was down. And it just got to the point where management couldn't sustain that dividend payout.
I mean, it's all about cash flow too for them. They downward adjusted their cash flow guidance by about $25 million in both ends. But they still expect somewhere around $4.5 billion in sales. They expect now on the top end $1.25 in earnings. So if you're paying $1.84 in dividends, your payout ratio, boom, over 100%. Even with adjusted EPS, which is the new flavor in investor relations right now, is adjusted EPS. I haven't seen adjusted EPS more than I have the last 3 years. But even that's below what the dividend payout was.
Yeah.
So they've got an uphill battle. Again, Bert and I also talked about specialties and really small niche industries and bedding materials, cushion seat materials, is not really our forte either, but we
No.
could say that about a lot of industries. However, this one in particular, being a smaller company under 5 billion in market cap, which in today's terms is a smaller cap company in our opinion.
Yeah.
Um, it's kind of where it's at.
Yeah. So that's the frustrating thing here is the signs were there and you just overlook them. You don't trade when you feel it's right. Instead, you hope for the long-term turnaround, and they are a dividend king no more.
No more.
Yeah, no more. And unfortunately, that cost us a lot of income, didn't it, Lanny? Um,
Yeah, for me, we'll start with mine because it's, you know, lower.
just say it, just say
Yeah,
it.
yeah. I lost $193 in forward income. So to give you a frame of reference, for me to invest that at 3.5%, I'll need to invest another $5,500 to make that up, which I obviously don't have just in my back pocket.
Yeah, well, kudos to you for it only being that much for you, Lanny. Because I own 219 and 80.84 shares because of the drip, the exciting drip. Our income before was $404 what we were receiving. So we were dripping a lot of shares. Fortunately, after, not so much. Our new income is $44. So our dividend income decreased $360. So in total, Lanny and I lost about $554 from this massive 89% dividend decrease.
And for Bert to make back the $360 in income, again, invested at 3.5% on average, is $10,300.
Yeah, it sucks. I mean, it's about it, and management's not really giving optimism that dividends coming back anytime soon. They gave their generic statements, but when you pull up the earnings transcript, they came out and said, someone just flat out asked them, "Are you going to return the dividend soon? Do you have a plan to get that back up as things turn around?" And they just gave a non-answer. I'll put it up here as we're talking through it. Non-answer about how, oh, we'll just reevaluate the dividend. So it doesn't give much confidence that any sort of elevated dividend increase, dividends coming back anytime soon.
Most cuts that we've experienced, because we've experienced a few, it usually takes a good 8 quarters sometimes to start seeing maybe some signs of an increase. Um, I'd be curious, AT&T, if you see an increase, again, I think I said that a few videos ago, you might see an increase there coming up in the next, 4 to 6 quarters. KMI, Kinder Morgan, took a couple years off after they cut theirs, and you
Man,
know,
yeah.
Intel just cut theirs, a year ago, so we'll have to kind of pay attention to that.
Yeah, so we'll see. And based on what you hear and what you're seeing from Leggett Plot, that's probably not coming back anytime soon. And whatever it is, you got to do to fix the balance sheet. That's going to be the most important thing for this company going forward. You got to
Yeah,
get it up and get sales going around.
guys, they did it because A, they need cash. B, liquidity, is key.
Yeah.
Managing their debt, because you have to pay debt at some point.
Yeah.
And when you have hundreds of millions of dollars going out to shareholders,
Yeah.
that's an easy lever to pull and just rip the band-aid for them. So
Yeah.
business decision wise, you can't
No,
argue it enough.
you get
That's
it. It's unfortunate. So what are we going to do with our positions? Unfortunately, Mr. Market has spoken already. Missed your chance to sell out of Leggett Pot, and at this point, there's really no sense in holding. In my mind, for me to cut my position at this point, take the massive losses from our 220 share position just isn't worth it. It's priced in. But the lesson I'm going to learn from here, and even Intel, who saw the pop up to 50, now has come back down to 30, is if there is positive momentum, it might not be a bad time to recap, cut your losses, take some money off the table where the losses aren't as drastic, get some back, and then move it into a position or an ETF that you feel much better about. What are you thinking, Lanny?
Yeah, I mean, luckily, this is why, as dividend investors, you stay diversified. You have not one stock, not five stocks, not 10 stocks. Fortunately, in my situation, I have 65 stocks. And this is a very small, if I actually look at the weight in just my taxable account, guys, bear with me. I've got my spreadsheet here handy. The weight of this was only 0.3% of my portfolio.
Yeah, so for
And
me,
the income was like 0.3, 0.2% as well. So it was
yeah,
small.
yeah, and that's the thing. Mine, it's probably about what, three, maybe 3%. No, not 3%. That's way too much. It's a small fraction of our overall pie. To your point, that's why you're diversified. That's why you keep investing. You don't put all your eggs in one basket. I don't know if we ever would have put all of our eggs in this basket, but it's just a reason to stay diversified, whether you diversify through individual stocks or you can achieve diversification individually and you do it with an ETF.
Yeah, and I mean, since Bert and I own over 100 shares, we could write some covered call, options to,
Yeah, that's an op. Yeah,
or to make some premium to make up some of that income that was lost. I mean,
yeah,
there is an opportunity there, but
yeah.
again,
We're not
it's you kind of just got to watch it. If I see it in the crawling back to the low to mid 20s, you better believe I'm going to start cutting down
a
that
hundred percent.
position.
100%. And lessons can be painful, lessons can be expensive, but it's important to see what you take away from it. For me, specialty industries, don't don't discount the payout ratio. This one was screaming too high of a payout ratio. Always factor in debt and don't be afraid to trade out of a position if you have a chance to walls at a higher level. Those are my takeaways.
Yeah, big takeaways, guys. I mean, be that much more stubborn and stern with quality. If
Mhm.
this stock is really low, I don't have my stocks in ticker symbol order, and where it's at in the numerical order of owning it is near the bottom, which means, I may have bought it at a time when I shouldn't either. Maybe I was reaching for yield, or maybe I was reaching for some stock that you know, again, to just stick to your core stocks and ETFs. Again, companies that are very large, ETFs that are diversified in and of itself, and don't stretch. If you don't have anything to buy, keep it yielding in some form of cash account or buy the ETF.
Yeah. So everyone let us know if you own Leggett Pot too. Were you impacted by this dividend cut? And if so, how much um how much income did you lose from this? If let us know too if you traded out, you saw this coming and you jumped ship before you could. Kudos to you if that was the case. Or let us know how you approach these types of situations when you own positions that you see ahead and south. We'd love to hear what you do to manage this.
Yeah, guys, smash that subscribe button. Definitely give us a thumbs up here on this channel, guys. Again, we're being transparent, showing you what happened,
Yeah.
telling you what we've learned and what we're going to do, guys. So if you like that, definitely let us know as well in the comments.
And just remember, if you're not with us, you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.